From a banking perspective, it was a good year in 2019. We saw an uptick in client activity. Was that what you saw as well? And how's it looking for the start of 2020?
Yeah, you're absolutely right. Last year overall was a good year. We had good inflows, reasonably good client activity. It wasn't as good as it has been in other years, but it was still good. And yeah, for this year, I think we're off to a good start. And we're quite optimistic in our outlook as well to again get a good new client inflows and hopefully a good client activity. But that always depends, of course.
Speak to us about those client inflows. I mean, what kind of inflows are you looking at? What kind of growth are you looking at?
We're looking at 5% of our overall assets as a target. Sometimes we're a bit better than that. And last year we were right around that level.
But it is quite a challenging time for private banking. We heard from UBS yesterday about a compression of margins. Is that what we're seeing as well? And how concerned are you about that?
We see the same trend. So margins have come down over the last couple of years, partly due to the low interest environment. We do think that margins will come down a little bit further. All the automation, digitization, of course, also help to bring down costs. Some of those sort of efficiency gains will be passed on to our clients. So yes, we do expect a bit more margin compression. That's okay.
Add to that negative rates. How is that impacting fees and flows?
Yeah, of course, we don't like the negative rates. We do hope for an environment that will eventually allow this now long-term trend to revert. But realistically, our expectations for this year for a significant rate change, sort of rates increasing, is not there. So we expect the situation to remain a little bit like we are seeing it now. So we're not too optimistic on that front.
It is distorting asset prices.
Yes, we do think that it is not helping with regards to asset allocation. Having said that, it has helped our asset management business that has a strong focus on private equity, has a strong focus on the alternative asset classes. And as people have struggled to get the returns in traditional asset classes, they've shifted their allocations to the alternatives, which is where we are strong, and that has been good for us.
The stock market has been rallying, never mind the risks. I mean, it does look like a market that wants to keep going up. How much more upside do you think there is to the stock market?
I think we have, as you pointed out, seen it grow and grow and grow. And I think there's a little bit more downside risk than upside chances. So we don't see anything sort of really threatening on the horizon, with the exception probably of the coronavirus that has just popped up. But the market has been resistant, and so hopefully we will enjoy a good market for a little bit longer.
At what stage, though, would you advise your clients to take money off the table? What would it take? What signs are you looking for?
We think that timing the markets is a really difficult thing to do. So we sort of advise our clients to be invested in a diversified strategy, be invested in companies that in an environment that has a little bit more risk can still do well. So timing the market has not worked out for people too well.
The focus here in Davos is ESG, climate change, sustainability. Are wealthy people warming up to the idea of investing in ESG investments?
Yes, I think the entire world is sort of warming up to the idea. And I would say that some of the institutional investors, especially from the sort of Nordic countries in Europe, also the Dutch, have been on the forefront of this trend. But gladly, we see it spreading, unfortunately also driven through the disasters that we have all also covered over the last couple of weeks. But it is clear we need to change in the way we're doing and running things, and therefore it's an important topic here and it's gaining momentum, and it's close to our heart because sort of we have always had a strong emphasis on running our business with a long-term orientation, being very long-term oriented and sustainable in our way of pursuing business.